Welcome to TradeTheMBA.com. This is John. This report is for the 4th of April. So we start off the month up near the relative highs of where we've seen for the last, since February here. And overall, with the MBI readings as they were, we've kind of reached a peak. So a fade here kind of becomes significant because you've had continued rising DOC. So we're going to be looking for the red DOC to flip. And now that shakeout's positive, any turn down there will be more significant, and of course, positive extreme for that last big move, which would just bring you back under the 4100 level. So certainly something to watch for, but the momentum clearly bullish overall, and no question about that. We're starting to see some interest in shorts, but again, it just keeps fueling the push, and with as much negative sentiment, you have an opportunity to really take advantage of people on the wrong side of that. And of course, the Nasdaq has been the leader in all of this, even from before when we were seeing the consolidation building into the S&P. The Nasdaq kept pushing towards its highs and uh, keeps making new ones. And so you can see the relative disparity between the Nasdaq and the S&P, and the Nasdaq clearly leading all of it. But last couple of days been under positive extremes, but really strong readings from DOC as well as MBI readings. So we won't be able to see that flip until it happens on the 50K at the earliest, and definitely on the 5K. Treasuries still keep uh, getting a lot of money flooded into them. So the belief is that peak rates are in and that the Fed is only going to soften. So that's continuing to lower the yield. And then from oil standpoint, that was a big jump and a sudden move by the OPEC Plus to cut additional barrels of oil, really skyrocketing that, and that's going to put returned inflation pressures back on. So while the Fed may have thought things have eased, could be setting up for another difficult run if that is maintained and or even continues to increase. If they continue to constrict supply, it's definitely going to have an impact, and that's certainly going to be positive in that for oil right now. It's just sort of consolidating at this particular stage, but um, I would look for that to continue to turn around because gold is definitely going to be the safe haven along with crypto assets. Euro still relatively up at its highs. It's been doing quite strong just because of the expectation that the U.S. is going to continue to soften. And the Eurozone is going to be so much tougher. But we think that's short-lived. Bitcoin that also up its premiums, and again, I think the same thing is going to be with ETH as well. They're going to continue to have strength simply because it becomes that alternative to being stuck in regular fiat currencies, and definitely just becomes a hedge. From a 50K standpoint, it bought the other day at the start and straight up from there. So that was pretty straightforward, not too far from the previous buy setup. We had the nice run from before, so it's continuing that. From a 5K standpoint, it was pretty clear stair stepping. We hit that 48, 4080, then jumped back above that 4103, and then now we're starting to hit that confluence of quite a few other previous algo levels that you can see it cleanly bounces off them, and just vibrates between. Right now we're slightly below the 4140, so that 4130 becomes the next bounce range in between, and I think it's going to be an exciting month, particularly as we get into an exhaustion period where if there reaches a point where bulls have just gone too far and aren't able to continue to squash the negative sentiment, that's going to be the real telltale factor if there are any major surprises. And I think that we have to watch that oil situation in that, because that could definitely be a negative surprise that the market has not priced in at this particular stage, solely thinking that the Fed is going to be in a soft approach. So continue to follow the indicators, and as always, trade well.